Folks, the next 48 to 72 hours is going to be insane, and we've got three major items to discuss. Number one, the market situationito heading into Monday, and some crucial data we just got from major funds on their buy and sell orders. The pending ones that you definitely want to be aware of if you're in this market right now. Number two, the catalysts and companies reporting earnings. And number three, the hottest three trades to know about. We're going to put all the timestamps down below and we will get to work right away. So we are now heading into week 3 of the latest bear market rally. And for context, if you go back to our take on October 16th, it was our view that you had about a 70% chance of this happening before the Fed meeting on November 2nd. And last week, my thought process was we have an increasingly high likelihood of continuing the pattern of reaching to our red directional SMA, like we have in previous bear market rally attempts this year. And I continue to believe that if not in this particular attempt, then the next attempt will show that push upward and over the moving average like we've previously seen several times this year, especially if the Fed meeting this week meets expectations and fuels a post-Fed meeting relief rally. So how long does the raw data suggest that this relief rally is going to last? Well, take a gander, a beautiful gander at this data set from Nomura on the CTA positions and buy order placements. This tells us estimates on where the major algos are set to buy and sell. Remember, a ton of market trading is simply just riding trends and not having any care about the actual long-term direction of the market, right? Or any value fundamentally. It's just literally trend riding. And if you understand that and you track what the algos are going to be doing, you may be able to get a little extra alpha on the rest of the market. So according to Nomura's estimates, the level to buy on the S&P 500 is right now set to 39.55. The S&P 500 currently trades at 39.01. The level to buy on the Russell 2000 is set to 18.05. The Russell trades at 18.46 currently, which means this has already started being triggered. The level to buy on the NASDAQ 100 is set to 12.270. The NASDAQ is currently trading at 11,102. So with the exception of the NASDAQ, the S&P 500 is about to be triggered and the Russell 2000 has already been triggered and should already start seeing some inflows as we saw on Friday. Now the NASDAQ of course needs to do some extra jumping because it did get beat down because of all those bad big tech earnings, but it could very, very quickly at the current pace pass into the area where it activates these buy orders. And what we have seen, folks, over and over again this year is that when you hit the estimates at which the CTAs start selling or start buying, you see a huge amplification of hundreds of billions of dollars in one way or the other, right? The way that corresponds with which direction you're heading. So if you want to understand how much power is left in this bear market rally, you have to look at these numbers and say, hey, if we continue on the direction that we're headed on, there's a lot of power left in this bear market rally. Now, obviously, the crucial question is, will this overall momentum be able to withstand whatever happens on the Fed meeting coming on this Wednesday? As you know, markets are expecting a 75 basis point hike. And quite frankly, they're not super concerned about that. What they are concerned about is the terminal rate, where we cap out at. What's the highest that the Fed's going to go on this overall policy trajectory? And right now, markets are expecting 5%. Some people are starting to hint at 5.5, maybe even 6, although you haven't seen that evil 6 number really pop out yet. But if you go and they post that dot plot and all of a sudden you start seeing more and more FOMC meeting members, the Fed members, going and voting and saying that they think you have to go to 6%, well, that means that we're moving in a more and more hawkish direction, directionista. And according to Goldman's trading desk, quote, if Jay Powell gives the green light next week and doesn't deliver a Jackson Hole type performance, there is very little to stop this move from a technical standpoint. A body in motion stays in motion. Listen to that. A body in motion stays in motion. We're in motion to the upside. They're saying, hey, a body in motion, unless it's stopped, unless somebody puts a truck in front of it, well, it stays in motion. Ultimately, it will be a wonderful shorting opportunity, but there is no point in kissing the freight train if J-Pow is waving a green flag. Basically saying, hey, don't be confused. This is a bear market rally, but at the same time, bear market rallies can be pretty damn strong. So don't kiss the freight train as it's going 150 miles per hour. Allow it to happen, let it run, profit off it, and then short it, is basically what they're saying here. And as of right now, markets seem to be cooling off. They seem to be calming down. They seem to be suggesting that, well, we're not going to have a lot of terrible new news in the next couple of months. It's going to be maybe neutral. You're going to see more of what we've already been seeing. Inflation being a little bit more stubborn, the Fed being a little bit more hawkish, but nothing crazy unless you're seeing financial conditions ease across indices. And the VIX has consistently downtrended and is back in the mid-20s, which is just a slightly elevated elevated anxiety range, suggesting less demand for hedges and lessening overall anxiety again. So for folks who are on team bear market rally right now, it seems like we're certainly winning on that front. Obviously, as traders and investors in the stock market, you got to be very, very stoic and understand that you can't predict everything. But at the same time, we've passed a lot of earnings. A lot of the major earnings have already come out, which means that you're not going to have a lot of rug pulls from that. And at the same time, once this Fed meeting is over, yes, we're going to have another inflation report, but as I said, it's probably just going to be a little bit hotter, or maybe it's going to be a little bit flat. And you're also going to have an employment report, which probably is a slight bit weaker than the previous one. But at the end of the day, in the foreseeable future, heading into the holidays, it doesn't seem like there's a ton to be just completely scared about. It seems like, hey, the markets are down a lot. The Fed is going to be following their current trajectory. People are going to doubt how far they're going to go. And then all of a sudden into 2023, you start getting a lot of problems. But right now, a little bit of quiet before the storm, right? And that's why I think that you're seeing a lot of people say, you know what, now might be the time to ride a bear market rally. And in a few moments, we're going to continue on with all the companies that are going to be reporting earnings this week, different catalysts that you're going to have to know about, as well as the top 3 trades heading into this week. But first, a word from our sponsor and Charlie with a different jacket. But first, a word from today's sponsor, Moomoo, and the up to 15 free stocks that you can get if you open an account and deposit with my link down below. Australian users can get up to 50 AUD cash back. Terms and conditions apply. So let me ask you this question. Would you show up to battle without the proper weapons? I wouldn't. No matter how good of a warrior you are, you need the proper gear to thrive and survive. Moomoo is exactly that, a fierce trading platform for active traders just like yourselves. Moomoo is a one-stop trading app that features a comprehensive stock screener, free, real-time level 2 data, daily short volume, and allows you to unlock 24/7 premium news for free. The Moomoo app provides visualized financial information to help you understand and evaluate individual stocks, visualized holdings and portfolios from institutional funds to help you develop investing strategies. And as we are in a very critical earnings season, one feature that I would like to highlight today is the earnings calendar. You can scroll through and see which stocks are reporting earnings in the coming week, and more importantly, get a rapid to the point rundown on what they've reported. For example, here I can see GME is focused on becoming profitable and launching new proprietary products. I can see NIO's vehicle margin decreased attributed to increased battery cost per unit. I can see Grab reported strong top line growth underpinned by a rebound in their mobility segment and continued growth in deliveries. And then I can expand and see more crucial information. It's tools like these that can help you take your trading to the next level and drown out all of the noise. And to give them a shot, they are again offering you up to 15 free stocks available only with our link down below. Anyways, thank you again, Moomoo, for sponsoring today's video. Now back to the content. Okay, moving on to catalysts coming this week. So Monday you have Nada, Tuesday you have NIO, Lee, and XPEV reporting deliveries, giving some crucial insight into the EV market in that region. Earnings-wise, you have SoFi, Uber, Pfizer, BP, Toyota, AMD, Airbnb, Chesapeake Energy, and MicroStrategy. MicroStrategy should be very, very interesting considering the overall beatdown that we've seen in the crypto sector. Wednesday will be the big FOMC meeting where the Fed will release its statement on interest rates and, of course, monetary policy around 2 p.m. Eastern Standard Time. Fed futures are again showing a high probability of a 75 basis point hike. I'm most interested in seeing the new dot plot. That's what I like to look for because the overall trajectory is what is key. What is the Fed leaning on in terms of an overall trajectory? For earnings, we have CVS, Generac, Progressive, Roku, Qualcomm, Robinhood, Etsy, and Lumen. Thursday, we have Royal Caribbean, Moderna, Datadog, Nikola, PayPal, Coinbase, Mercado Libre, Twilio, Starbucks, Carvana, and Cloudflare. Friday, you have the jobs report for October coming out. It seems like there's some closures in terms of new job openings and overall listings, but you haven't really hit too far into the negative yet at all. Then earnings, you have Fubo TV, DraftKings, Dominion Energy. I am looking forward to seeing what DraftKings is doing. Obviously, that business model is not great during a contractionary environment. But how are they doing anyways, right? How are they able to hold themselves afloat? I think they're going to do pretty well when you get out of the recession right now. Not super bullish on them. But hey, overall trajectory, I think they can survive and I think they can thrive on the other side. Plus, they have a lot of different ballot measures in these November elections, so perhaps they add some new states. Okay, so let's go ahead and move over to trades. We'll start with Mullen. She's currently holding that 46.40 cent support level and had several iterations of bounces on top of that. Support levels in the previous leg down had a similar ordeal of showing proof of concept and then building on top of that. Of course, this also comes with the backdrop of different acquisition news and anticipation of this media event that's going on right now. So my thought process heading into this week is see if Mullen can remain relatively relevant. See if it can retain that overall relevancy. Their vehicle is enjoying some heightened coverage as a result of the media event that is going on, and it is fairly sharp looking, and I think it could turn some heads and get some big headlines in terms of different websites that cover it, which then leads a certain percentage of people to look at that car and say, wait a second, what stock is attached to this car company? And then they go and they look at the stock and it's a super small cap, and they mistake that as cheap, and because a lot of people give it attention and it's a small cap, all of a sudden you get a little bit of a rally. Options heading out all the way until November 25th are suggesting a high likelihood that Molinito holds above 50 cents and at bare minimum holds current support. If that continues to be true, I have a hard time believing you won't see another shot to at least 1 or 2 new cycle highs. And hey, that could be a decent return if you play that right. Next, if the bear market thesis continues to be correct, I would expect some of the tighter short squeeze grounds to see some massive explosions. One of the areas that I'm watching is the more famous squeeze stock categories. You look at GME. This is the longest period of time in this bear market where you haven't gone any major breakout attempt. It's just been basically barcoding. Just earlier this year, you had 2 massive periods of time where you had a double plus in growth, but since the sell-off into late August and September, you haven't gotten any sizable reversal, and to me, an overall bear market rally that lasts more than a couple weeks would almost guarantee some upside from GME. Now next, in terms of AMC, say what you want in terms of shareholder dilution via APE. I've said my piece on that in the past, but this is still one of the longest winded periods in the overall bear market that you haven't seen any sort of contesting bullish strength trying to reverse the overall massive downtrend. And quite frankly, if you look at this from a TA perspective and really a common sense perspective, it seems to me that AMC is really due for a reversal rally in the coming weeks. If you get a big bear market rally, which we seem to be heading into, then it seems really impossible, almost impossible for AMC not to have some sort of rebound rally. And finally, for the third stock, Beyond Meat is starting to look extra juicy, but not juice that would come from meat, of course. Now, clearly the stock is going to get destroyed whenever the inflation and Fed fear narrative take hold, and that will take hold on a rolling scale this year and into next. But in a world where the bear market rally continues, I expect huge short-term upside. Short interest has been consistently going up despite shares going down. It's now at 42% of free float according to Ortex, which is extremely sizable. And quite frankly, last time we had a sizable bear market rally, it more than doubled. To me, the overall setup combined with a bear market rally in most major indices suggests that this is a prime candidate for a squeezy McSqueezy, and thus is a prime watch on my overall list. Let us know what your thoughts are heading into this week. What are your favorite plays? Let us know that below and why. If you want to learn more about how you can get up to 15 free stocks with Moomoo, make sure to hit that link down below. If you want to join us in ZipTrader U for our step-by-step lessons, private chat, daily morning briefings, and full price target list, I will put a link to that below. Hope you had a great weekend. Have a good rest of your day, and we will see you tomorrow.